Good morning, everybody. I think we now have enough quorum that we're going to start. Given that it's not such a big group, the way we're going to do it is keep it easy, keep it light, keep it more conversational and discussion oriented. And so before I get into the presentation, can we just see by show of hands how many of you actually deal with indirect taxes? You do, okay. You also, all right. Because I guess indirect taxes is a bit of a specialized area of practice. So if people have been doing predominantly corporate tax, then some of what I say may be too technical. Please feel free to stop me, because really the idea is to just get more people familiar with the issues. So if there's anything that you want clarified or rediscussed, please do bring that up. So with that note, I'm going to start. The way we're going to run this is we're going to talk about a bunch of issues. Obviously, a Saturday morning is not enough to discuss everything there is to discuss on indirect taxes on the IT software world. But we have picked a few issues that we think are relevant, are topical, and are also interesting. I'm going to run through some part of the presentation, and thereafter I'll request my colleague, Parag Chavan, also to then run through some of the slides. We are likely to wind up by 12:30, so it's going to be a 2-hour session. We will also take a short break in between. So just by way of an introduction, what we are going to do is talk about indirect tax issues on a few key verticals. You can all hear me, right? Okay. So, I think IT, ITES, software, these are all very commonly used terms, but it's important to understand what it actually means. The range of players in the IT space can be as varied as from being just the hardware suppliers. So people like traditionally IBM, Lenovo, the ones who actually make the machines, right? Then you have the software companies, which is the likes of Oracle, Microsoft, etc. They actually make the software that makes the machine work. Then you have IT service providers, correct? These are all service providers who basically help you manage the hardware and the software and make sure that it works well. You also have something called IT-enabled services. These are companies who actually use the large IT platform to provide services which are not actually IT, but they just use that as a platform. So the most common example would be all your BPOs and call centers, etc., right? What they actually provide in terms of the service may be to do with, how to open a bank account, what kind of forms to fill up for an insurance recovery. It could be anything, but they use the IT platform. So we are going to talk about issues that are relevant for each one of them in a brief way. And then the reason I'm getting into the details of the operations actually is because from an indirect tax standpoint, it's a transaction tax, right? So it's very important to understand what the transaction actually is, because it's not like corporate tax where you look at a P&L and say, okay, this is the revenue, this is the expense, and what do I pay tax on? Here it actually is, when you're selling something, should you be paying service tax or should you be paying VAT? And really what you pay depends on what the transaction is all about. So it's very important to understand the details of the transaction each and every time. For instance, if you're licensing software, what does it actually mean? Does it mean that it's like going and buying a CD from a shop, or is it something different? So in each of the issues, we'll pick up the facts a little bit, we'll talk about what the transaction is, and then also talk about what the tax implications are. So this is just a little bit of an introduction on what software means, right? And I talked about, the likes of Oracle and Microsoft, etc. They're all software companies, but there are differences in the kind of software that they deal with. These are terms that you may have heard being used very extensively: package software and customized software. What does it mean? Package software, and this is a definition in the statute. I'm going to read that out for you, and then we'll discuss it thereafter. It means a software developed to meet the needs of a variety of users and which is intended or capable of being sold off the shelf. So it is something that is not made for you particularly or for you particularly. It is a standard product. So a classic example is a license that Microsoft sells, right? Windows, for instance. It's not made for anybody in particular. That's a package software. Then there's something called customized software, which is any custom designed software developed for a specific user client other than packaged software or canned software. Now this is really where, for instance, you have a specific need, you go to Infosys and you say, listen, this is my need, can you write up a software for me? And they write up something specifically for you. It's not there in the market before, it doesn't have a standard brand, it doesn't have a standard rack rate. They'll tell you, if I need to write the software up for you, this is how much I'm going to charge you. It's important to understand because a packaged software is really like a good. It's no different than a music video, right? Or an audio tape, because it's content written up, you know, on an application, but it's something that can be used by any number of people. Now, how is software supplied, right? And these are all things that, again, are very, very critical because and maybe I should talk about that a bit before I get into the details. What are the indirect taxes that can apply, and why should we worry so much about the details? Let me give you a backdrop. In the country today, we have very many indirect taxes. We have something called customs duty every time something comes from outside India into the country. We have something called excise duty when something is made in India. Any physical product made in India, whether this bottle of water, whether that candy there, it is all liable to excise duty. There is a VAT, or what used to be called sales tax, which is applicable every time a good is sold. When you enter into a transaction, it's either one of service or of a good. So it's meant to be either of the two. But if you're not clear on what the transaction is, if it's not written up properly, then both can theoretically apply. So given that there are a multiplicity of taxes, one should always attempt to understand what is the transaction and then determine what is the appropriate tax to be paid on. Okay. So in that context, like I said, you need to see what are the different kinds of software and what are the different delivery forms. So software can be supplied either electronically or it can also be supplied on a carrier medium. So for instance, today if you were to buy a software from Microsoft, how do they give it to you? It's not as if it comes on a CD, etc. You can go online, you can subscribe to it, they give you a license, it's all electronic, you sign up, you download, it's over and done with. So that's what we call the electronic form of transfer. It's also known as digital delivery or e-delivery. Typically what it requires is that when you sign up and you pay your fees or the license fees that they call, they give you an authenticity code, etc. And you need that code and the user ID to actually go and download the software. On the other hand, software can also be given on a carrier medium. It's not that common anymore, but it still exists. So very often when governments of states and even the central government goes out and buys a software, they do need to get it on a physical medium. That's the norm for the government. It's also the norm in various other companies. It's also the norm for certain types of software, because even today you can go and buy a software off the shelf on a CD and come back, correct? So whether you buy it electronically and download it off the net, or whether you go and buy it in a shop in what we call a shrink wrap software, they're both software. It's just the mode of delivery that's different. So I guess the first real issue and an issue that's been debated for many years in many different formats is, what is software? Is it a good or is it a service? Is it capable of being transmitted, transferred, delivered, stored and possessed? So you see the tests are very simple. They're saying, does it have a utility? And of course it would have a utility. Is it something that can be bought and sold? Yes, it can be. Is it capable of being transmitted, transferred, delivered? Now that's the important one. What are they saying? So it's saying it's not something that can be, that's just spoken of. It has to be capable of being stored, means it has to have some facets of physicality to it, correct? And on that basis, in the facts of that case, they said that software loaded on a medium is good. Really, that was a limited question that was there before the Supreme Court. They did not talk of electronic delivery. They did not talk of digital delivery of software. None of the complex transactions we are talking about today. It was a classic, simple case of where software was preloaded on a medium, and the issue is there a good or not? I think the answer was fairly obvious. It is a good, right? I mean, if it feels like a good, if you can touch it, if you can see it, if it has a value, why won't it be a good? But nonetheless, because the issue also was, what should be the value of that good then? Is it just the value of, for instance, the tape, the CD, or should it be the value of the software which writes on it? Because the value of the software is obviously far, far higher than just the value of the tape. So while the answer, I think, was fairly obvious, they laid down some rules to see whether software is a good or not. And like I said, it's a simple case of software loaded on a medium. But you see how things have changed since then to now. There are a couple of other bullet points on the slide, but I'm going to hold off on talking about it for now because I think it's interesting to see a couple of other things. Oh, we've jumped that, is it? Okay. So we've talked about this, so I'm going to run this past. We can come back to the excise and the customs duty, but let's look at the indirect, this slide. So, and another thing, I'm not going to run in any particular order through the slides because I think the slides are quite a few. What I'd like to do is make it interesting. So I'll run the theme through and you can go back and read it. It'll all make sense eventually when you go home and you do have the time to read it. Please look at it. But here's an interesting thing that happened. Because the Supreme Court said software is good, the whole country went into a tizzy and said, oh my God, every time there's software, there's good. So what did the Maharashtra circular say, for instance? It said that software can be sold in many different ways. Whether or not it is on a medium like this is irrelevant. It is a good, and that's what the Supreme Court has said. But hang on a minute, did the Supreme Court actually say that? No. So you see how things move very fast from there. And this is an interesting circular because it says that in all of these three forms, there is a software transaction. So the first is when there is a direct sale through a medium, like I said, either a CD or a floppy disk or software that is developed and loaded at the customer's premise, etc. That's kind of what the Supreme Court decision was about. But what they now included in the meaning of software is a couple of other transactions, where the second deemed sale is where a software is developed, programmed as per the specifications of the purchaser and supplied by way of loading the same on purchaser's device or computer, and the contract also envisages fee for such services. Now, this could very well be the second instance that you talked about, right, where the IPR actually gets transferred. It could very well be, because when I come, for instance, if I am a service provider, I am an app or a program developer, I come to your office and I write up a software and I give it to you. They're saying in all of those instances, it is a software transaction and therefore liable to VAT. But like you said, the truth is if I've done all that and I'm saying that the IPR also in that belongs to you and I've written it as per your specification. Yeah. Correct. And I'm only the service provider who stepped in to do the work for hire. Correct? But that should have been the principle, but that's not how the tax office has viewed it in this example. Of course, correct. I agree. I don't think the distinction should be whether the form of delivery. It is really the nature of the rights that get transferred. And we'll come to that a little later, but the limited point I'm making here is, see how the concept of good is evolved, see how the concept of whether software is a service or a good is evolved. What it began with is to say when it's on a medium, it is software. What the VAT authorities here are saying, no, even if it is not on a medium, but if it is something that's supplied electronically, it is a good, no doubt about it. It is perhaps the right answer, but look at the third bullet. Is that a right answer? Because they're saying, even if a manpower supply arrangement based on man hours or similar arrangement is also software, correct? Doesn't have to be. If you are engaging the services of somebody else to come and do something at your behest, your request, etc., where is the question of transfer of property? He's a service provider coming and doing the work for you. But as always, we begin somewhere, but I think the law evolves to a completely different point, and very often the tax office is ahead of its time. And that is what happened in the case of software and VAT as well. Now let's see what happens in service tax. And so if all these software transactions are transactions in goods, then clearly there should be no question of service tax, correct? Because like I said, at a conceptual level, there is service tax which is levied by the central government on service transactions. There is the VAT is levied on sale of goods as per the Constitution of India, which has delineated the powers. It has said states can recover monies on some transactions, central can recover monies on certain transactions. So there should not be an overlap ideally. But is that what has happened? No. And this slide actually talks of the new law which came in service tax from July 2012. But much before this, what really happened is in 2008, the service tax laws got amended to say that every time you have a transfer of a software electronically, that is a service. Because you are effectively getting a limited transfer license to use the software, and that is a service. So what happened in 2008 really is that transactions which were up until then only liable to VAT now also became liable to service tax. And it was a big issue for the industry. All of them across different segments, they were grappling with, do I pay both, because that's not the intent. But forgetting the intent, if you look at the law, the way it was written up, yes, it seemed like both had to be paid. And more often than not, companies took the view that it's better to pay both rather than getting into a litigation. But what that really meant is that end customers like you and me suffered, right? Because any indirect taxes is passed on. No company is going to bear that hit to the bottom line. So both levies started getting applied. That's from 2008 to 2012. Now in 2012, the story changed again a little bit. Let's see what we have. This is in the context of service tax, right? They introduced a negative list regime for taxation of service from 2012. It effectively said that service tax will apply on all service transactions other than those that are in the negative list or in the exemption list. Now this was a dramatic change from what used to be the situation before, because up until 2012, service tax applied only on specified services, right? So it listed some 120 odd services. If you were covered in that, you had to pay a service tax. If you were not covered in that, you never had to pay. But in 2012, they said, we don't want to deal with this complicated system. Let's just get everything under the levy of tax. And if we don't intend to tax you, we'll put you on a separate list. Now, where did this leave software? The definition, there is something called a deemed service. They're saying what classic service is what it is, but there are certain transactions that we will deem to be service. One of them is development, design, programming, customization, adaptation, upgradation, enhancement, implementation of IT software. So none of them actually, this clause does not really talk about license of software. All of these talks of instances where somebody is coming and either writing something for you, maintaining something for you, upgrading something for you, or implementing that, and they're saying that is a declared service. As far as license of a software, the law itself did not say anything specific. However, what the law also said is transfer of goods by way of leasing, licensing, hiring, or any such manner is a declared service. Means they're all deemed to be service anyway. Okay. But the interesting part is the definition of service also excludes a transaction that qualifies as a sale. So you have a bunch of things that said all these are service transactions and therefore liable to be a service tax. But the definition also said, however, if you're a transaction liable to VAT, then you should not be liable to service tax. So we've come back a little bit, right? In 2008, they said, we don't care whether VAT applies or not, please pay both. And today, we have a law which says, oh, hang on a minute, if you're paying VAT, then maybe you should not pay service tax. But that answer is not coming out clearly. It is not the law is not saying it. There are a bunch of provisions, all of which that we put out here. And there is also a circular